Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our fundamental video analysis segment. Let's begin by looking at the economic numbers from Europe. Everything was pretty much dire. We had the services PMI for France, Italy, Germany and for the Eurozone. And all of them are in a strong negative territory. But it was pretty much expected. No one expected for these numbers to perform really well, especially when the entire Europe is in a lockdown situation, and especially when those coronavirus cases have surged well over 1 million cases, according to Johns Hopkins University research. So these numbers falling to these levels today, there is nothing new about that. And if you compare them in relative perspective, of course it is the Italian services PMI number which is sitting at 17 and it is enormously weak. But again, it was something expected because Italy is the epicenter of this particular disease, and it was widely expected for Italian market to suffer the most. And as shown in the chart, it is your FTSE MIB, the Italian index, which has suffered the most among other major indices, and it is expected for this index to underperform in comparison to how the DAX performance is. Again, as shown on the chart, you can see the DAX performance isn't that great, but still in relative perspective it is somewhat better. But keeping on the economic numbers, remember at 1:30 p.m. UK time today, we are going to get the US non-farm payroll number, folks, and this is the mother of all economic data. Expect volatility across every single derivative, especially anything which is dollar denominated. I am speaking of euro dollar, sterling dollar, Japanese yen, and of course the US indices. And in here we are talking about S&P 500 index, the Nasdaq, and of course the Dow Jones index. Yesterday, we've seen a little bit of a surge in the US market, but again, we're still very much looking at those Fibonacci retracement ratios from its all-time high to its recent low, and I'm still looking at that 38% retracement and how that holds, because right now the price is very much in battle with the 23% retracement level. But keeping everything on the fundamentals, it is all about oil. Why? Because the OPEC Plus is about to meet on Monday. It has announced a virtual meeting among the OPEC Plus members, and it is widely anticipated the meeting is going to be about supply cut, and it will yield a positive outcome. Now remember, the benchmark has been set by Donald Trump, who has tweeted about that, okay, it could be anywhere between 10 million to 15 million barrels. There are some reports, there are some rumors out there which says that, okay, it can go all the way to 15 million. But just to put things in perspective, when it comes to that cut, the US oil production is nearly 10 million barrels per day. When it comes to Saudi Arabia, we are talking about 12 million barrels per day. So if that production cut really takes place, that means, wiping off all the 10 million barrels out of Saudi production and leaving 2 million barrels on the table. But of course, that is not how the production cut really takes place. It is cushioned by other members as well, and this is a collective decision. Nonetheless, the question over here is that when oil price can really go with respect to this supply cut, which is expected to come as soon as Monday. Now, to answer that question, you have to look from the equation of from supply and demand. Is the oil price majorly denominated by supply or by demand? The answer is clear. It is the demand equation, because the underlying factors such as coronavirus impact and the global lockdown is very much impacting the demand, right? So yes, a supply cut is going to produce a positive result for oil prices, and yes, it is highly likely for oil prices to go, especially for WTI crude, to go well above 30 maybe, but perhaps below 35. I don't expect the prices to go above 40 under any circumstances, especially when it comes to WTI crude. Why? Because again, it is about coronavirus, and that the impact and the influence of that needs to filter out of this equation before we can really see that again, the big surge. So, by having this supply cut in place, Donald Trump can still come back, and then he can still show his, that I'm not pleased with the production cut. The fact is, it is not about supply right now. Yes, it is going to have a positive impact, but the bigger impact is only going to be on the oil price when we're going to see the economy going back to its normality, when we're going to see this lockdown completely removed, and of course coronavirus cases starts to shut down, and so there is this fear of coronavirus kind of fades away and filters out of the system. That is when we're going to see oil prices back above $40, $50, and $60 price level. Alright, that's all for today. Have a lovely weekend and stay safe. See you guys tomorrow.